Hey everyone, it's Sarah and Amy. And today we're going to talk to you about a home equity line of credit and VA loans doing a cash out refinance.
Yes.
Whether or not, which one is the better option?
Yes.
Yes.
So in the past few weeks, I've started to see a lot more commercials advertising to veterans on taking cash out of their home. And also I've been getting a lot more inquiries about which is better, a home equity line of credit or doing a cash out refinance if you're a veteran. And my personal advice when I'm looking at this, most veterans have a very low interest rate right now on their current homes. So we weigh out the pros and cons of does taking a higher interest rate potentially in the high 5s or low 6s make sense, or doing a home equity line of credit. And I really think it comes down to what your target is that you're paying off. If you're looking to pay off debt, credit cards, student loans are coming back into effect. Maybe you have a high interest car payment, rare, but you may. Doing a traditional cash out refinance may make more sense because overall the lower interest rate, even on a larger loan amount, makes more sense because you're paying off debt that's in potentially the 20+% interest rates.
Like credit cards.
Yes. So if you're looking to do potential home improvements, something that's going to be a little bit short term, maybe you're looking to sell in the next 6 months to a year, or you're just looking to make this more into your forever home, a home equity line of credit may make more sense because it is a full line of credit. The rate is variable on it. It is a little bit higher than the 6s, but if you don't have anything drawn on it, there is no payment to be made on it. So you still have the benefits of your very low interest rate. You're planning to be there for a potential long while or even a short while. That may be a better product for you versus just doing a traditional cash out refinance. And there is some caveats. If you do a cash out refinance, there's some waiting periods that the VA or the Veterans Association has put into place by the next time you can refinance on your home again. So we have to weigh out all those pros and cons, but it definitely makes sense if you feel like maybe it's time to reevaluate and to tap into some of that equity one way or the other. It's a great time to talk about that.
So going back to the HELOC,
Yes.
And comparing it to a cash out refinance with the VA loan, if you're a seller and you want to do some upgrades to the house before you sell, the HELOC is the way to go because the cash out refinance with VA loans, you were saying something about that.
They have a certain waiting period on when you can use that benefit again, and it's
Okay.
usually 210 days.
Okay.
So the home equity line of credit's a little bit more beneficial because there's no prepayment penalty.
Okay.
And they're usually traditionally close a little bit faster than if you were to do a cash out refinance. You're going to probably take about a full 30 days to do that.
Okay.
So I think if you're looking to sell and need a short-term amount of money for updates, I most likely would recommend a home equity line of credit.
Okay. Yeah. So that right there comes with preparation, right? So just knowing that that's what you want to do, and then having the time to take out the money, do the rehab that you want to do, and then get it on the market to sell. So it looks like there's a couple of options here on what we were talking about. So if you do have any questions or if you want us to dive deeper into what we've been talking about, you know where we are.